Hi, everyone. Take two on that. We are so pleased to be getting into it with Bart. Bart is here today as a Senior Investment Officer at AgriFi, a sustainable agriculture investment facility managed by the Association for European Development Finance Institutions, EDFIMC. AgriFi invests in impactful agricultural projects in sub-Saharan Africa, the Caribbean, and the Pacific, with a special focus on smallholder farms. He's been active in the impact finance space since 2016 with roles as investment officer at BIO and as part of the blended finance investment team at the European Commission. Prior to this, he worked as in an international banking sector. Bart, turning it over to you, would love you to get into it. Well, please jump into the chat if you're here to ask some questions, and we'll get to them at the end.
Thank you, Heather. Hi, everyone. Thanks also to the organization for providing us with this platform to introduce our facility. I have prepared a presentation that I will share with you, just so you'll all be able to follow what I'll be presenting. If you give me 1 second. I believe my presentation should be on screen now. There we go. So indeed, as the introduction said, at VMC AgriFi, we are a sustainable agriculture facility organized under the management company of the European Association for Development Finance Institutions. So that means that we bilateral DFIs of the member states in Europe are shareholders of our management company, and the facilities are organized in different thematics, and we are part of the sustainable agriculture one. Our financing is provided by the European Commission, meaning that our priorities and our priority setting is also done in close consideration with the European Commission. So they're a very important partner for us as an organization. So we were created in 2018, and as mentioned, 100% financed by the European Commission. The main overarching target objective that we're trying to impact is to support smallholder farmers on their path to commercial viability and to sustainable farming. We do this mainly in OECD DAC countries, and our specific area of operations is located in sub-Saharan Africa, with a specific focus as well on the Caribbean region, as well as the Pacific region. So we try to serve as a catalyst, as a bit of a market developer in the impact finance space, in the sense that we would go looking for projects that may be a bit more early stage, a bit smaller than what normal DFIs would finance. And by DFI, I mean institutions such as Proparco, FMO, DEG, BII, etc. And so by doing these investments, we aim to unlock further investments further down the road, or we can assist them in joining their investment tickets and de-risk these partner organizations. So we're active throughout the agriculture value chains. So we can finance companies or organizations active in the processing part, the producer part, services, logistics, etc. And we are able to finance many different value chains. It really depends on location, in which country, in which value chain we'll be investing. So we, as mentioned, the main purpose of the facility is to create a measurable impact on the livelihoods of smallholder farmers. So basically, by making our investments, we try to increase farmer incomes, and by doing so, we support projects or companies that actually make strong bonds with smallholder farmers and are focused on growing their output and production, also for local food security, but also export-oriented businesses. As you see on the right side of this slide, a key part of what we do is to measure try to measure the impact that we're making, and that's quite important for us to pursue the model that we're doing. So we try to keep data on the amount of smallholder farmers that the investment has indirectly and directly impacted on the amount of job creation, on the agricultural output, income increases, etc. So those all are requirements by our stakeholders that we try to include in our reporting to external parties. So we do our investments in several different ways. There's a direct way of providing our financing through loans or equity injections directly to SMEs. So these are usually then high potential SMEs with a key place in local value chains that are contributing to integration of these value chains, and always with a strong smallholder element in their business model. Alternatively, we can also finance indirectly. And so then there's two different options here. We finance financial institutions, which includes MFIs, but also other types of financial institutions. And we would then finance part of their agricultural portfolio or the growth of their agricultural portfolio. So with the aim to unlock financing opportunities to the smallholder farmer and agricultural SME segment. And then lastly, we would invest in impact funds indirectly. Also here, where the strategy of the fund contains a strong agricultural angle with investments in impactful SMEs at perhaps smaller ticket sizes that we are unable to do. Our instrument, so the terms of our offering, the ticket sizes, they range between $500,000 to $1 million to a maximum of 5 million of either senior debt, junior debt, quasi-equity or equity. So we can really offer a tailored instrument depending on the needs of the potential client, based on the business plan and the maturity of the company. So as mentioned, we have a focus on the agricultural, but also on the forestry value chains. And for example, in the agriculture, we include food crops such as maize and soy, but also export crops such as coffee and cashew. And we also include livestock, so poultry farming or dairy farming are also options that we can consider financing in. It's important to stress the catalyst role that we look to play, in the sense that we serve as the first entrant usually in many of these projects or companies, with the purpose then that other types of financial partners would then come in to provide financing to facilitate the next stage of growth of our partner companies. We work on flexible commercial terms, but important to note that we work at market rates. So as it's important to not distort the market in order to attract the future financing, we are able and willing to think with the company to see what is a plausible rate, and so we can discuss whether we can provide financing in local currency, whether there's a preference in hard currency. We can have long grace periods, and we really try to place ourselves on the market with long tenors. So we offer our financing at up to 10 years with a sizable grace period included as well. And alongside our investments, we have the option to provide technical assistance support, which means that we would offer you grant funding to develop a certain part of a business, whether that be market studies or the development of an environmental and social management system, improvements in the digitalization of the company, or trainings, governance improvements. So these are all things we're able to think about jointly with our investee companies, and to come to a comprehensive and complementary package of financial instrument and technical assistance. Then the type of company or project that we're looking to support. So we need to have a little bit of a track record. So a few years usually would be sufficient, with a business plan that shows or that leads towards a viable business model. So there needs to be financial profitability in the long run. So the business needs to be sustainable, both from a financial as an environmental and social perspective. As mentioned earlier, the impact or the importance of the smallholder element is very important. So, for example, we would work together with processing companies that source either directly or indirectly from their smallholder farmers in their area of operation. And so that with the purpose that would increase the incomes for these farmers, they would focus on certification, providing a stable and dependable offtake, etc. And so, of course, we would then also proceed to monitoring, evaluate, and measure the results of our investments. So just to give you a bit of a short overview of our portfolio, and I'm trying to be very wary of time, given it's almost 7. But right now we have about 10, 11 projects in portfolio, as you see, spread out over the 3 different types of investments that we make. And so there's all kind of value chains, and you see on the right side of each table that there's a tracking for this number of smallholder farmers impacted. So that's something very important what we do. As you will go through this portfolio, you'll notice that we don't yet have an investment in the Caribbean region, and that's why we're very grateful to have been invited here today to present our facility. Because we, as you can see in this slide, these are our budgets. We have country budgets for Ghana, Sri Lanka, Tanzania, with some new budgets for Togo and Nigeria in the works. But the one that's most relevant for today is the one for the ACP region, which includes the Caribbean. And with our ACP Secretariat stakeholders, it's very important that we have a regional diversification of the portfolio. So there's an envelope of 50 million euros to spend in the region, and we're looking to spend part of that in the Caribbean region. From that perspective, it's an important presentation that I will make here today, because I would invite you to either ask questions in the Q&A, or feel free to get in touch with me or one of my colleagues at the below email addresses. So what a process could look like is that we would just discuss the potential project together, see whether it fits the mandate, and then we can take the conversation from there. I hope that was clear. I think we have some time for Q&A, so please feel free to ask any questions you may have. So that I'm just going into the chat, perhaps. The process of engaging AgriFi as a potential investor. Yes, indeed, I would. You can always send us an email at one of the email addresses that you see here included on the slide, and then we can organize a discussion from there. I think also for the organization, it should be possible to disseminate my contact details to the attendees in case they're unable to note down the contact details. Well, I think there's no precise questions at the moment, but as mentioned, feel free to reach out to me directly, and then we can discuss in more detail. Okay, I'm responding to the question of Juan. So the question is when the process for identifying candidates in the Caribbean region is started. This is an ongoing process, so we're just engaging in conversations as they take place. We're also working together closely with the FAO to bring us in touch with potential investees, and so they're doing a lot of important work for us in the region. So we are in the process of identification now, and if there's any interest, then feel free to drop me an email. Regarding characteristics of the fund managers that we work with, usually we also require a certain track record, or at least a strong backing of experience in the fund management space. And we usually would focus on strategies that are complementary to ours, meaning the ticket sizes smaller than what we would usually go to, so smaller than 1 million to $500,000. And also funds with a focus on equity investments, because direct investments to SMEs, in our case, is usually done by providing debt. If there are funds that have a focus on small ticket equity investments to the SME space, then that would be very interesting and complementary for us to consider. But we're quite agnostic, so we can determine on a case-by-case basis.